So it should be live. All right, cool. So we are live on Facebook and on YouTube. So welcome, guys. So hopefully you're on YouTube watching this. I always tell you guys, like, if you're on Facebook, look for the YouTube link that I post because it's much easier to talk to you on the comments on the actual like YouTube itself. So I see quite a few people already starting to watch. I hope this is going to be a fun discussion with Lance. So it's been a while since we did one of these, right, Lance?
Yeah, been a few months, yeah.
A couple months, but we're hoping to go through some results from Lance's trading and from ThetaTraderz. So let us know in the comments if you're actually in ThetaTraderz, because it's always interesting to know who is here and watching. Say hello, don't be shy. We want to do lots of questions and answers, basically talking back and forth about like what results we saw like in ThetaTraderz and just kind of go from there. So yeah, make sure you say hello in the comments. We're going to do like a short presentation. I think we have a couple of things to share. So should we share the spreadsheet first, Lance?
Yeah, sure. Let me share my screen on my end here.
Yeah, so if you do that, I'll post in the document. So this is one of the things I really love about Lance and working with Lance is that he's probably one of the most transparent, straightforward traders that you can come across. I've been doing this for about a decade now, and it's very, very rare for somebody to be this open and straightforward with the results. Hey, Andres, how's it going? So if you look in the chat on YouTube at the moment, I just posted in the Google Docs to everything that we're going to be talking about tonight. So you can go through this at your leisure. One thing I found by trial and error is you need to zoom out sometimes. So there's lots of really interesting plots, which we're going to talk about. But if you're zoomed in too much on the document, you're going to end up like not seeing the plot. So you'll see all the columns, but you don't actually see the plot. And the plot itself is fantastic. Coming from a science point of view, same with Lance, seeing that like in graphical form is really, really helpful and interesting. So we're going to start talking about that a little bit. So hopefully, yep.
So just a quick thing. If you open up that file that Russell just sent in the chat, there's different tabs on the bottom that goes over each strategy. I think the best way to go over this, I'll do one tab at a time and then leave it open for any questions on that particular strategy. And once we're done with that, we just go to the next type of strategy and go from there. Okay.
Yeah, sounds good. So put up your slideshow at the moment. If you guys have questions, just let us know as we go. If you have more in-depth questions, I'll make sure we post our email addresses so you can email us with extra questions, because the audience tonight is probably going to be quite varied. There's going to be people that have taken these trades in ThetaTraderz. There's also going to be people that have no clue what selling options really is. So if it's over your head, don't worry too much. You can contact us personally via email. I'll leave links for that as we go along. So.
All right, sounds good. So we're going to look at the CSP, that stands for cash secured put. This is essentially when we're selling put options to take in premium, take in income, and you could be getting paid pretty much every month in terms of using the cash that's available in your brokerage. So all of the following dots you see on my screen are the percent return on just complete cash secured. This does not involve margin at all. If you do want to use it with margin, we could discuss strategies to use them with and to be safe about it. But I like to be able to do these things with zero margin and just have it with the cash available. And these are also what I do mostly in my Roth IRA accounts. So what's good about a Roth IRA and doing these strategies is you won't have to pay taxes on the gains. So this is a flow chart of the percent returns. The way to figure out the percent return is we have the stock name, we have the date of expiration with the stock price, and then the strike price. If you notice the difference between the stock price and the strike price, they're quite a bit lower in the strike price. We want to have a lot of cushion in these particular positions. So for instance, on a like random one that we picked, let's say AMC in March was at $18.14. We sold a $12 put contract. So that's a dramatic difference. It would have to drop $6 in about a month time. So in that case, we actually took in, say, $50. We bought to close it, usually a 50% profit. We don't want to stay in the trade the whole time because it helps us flow our money into newer positions. So that means we bought to close it at about 50% profit, so $25. We made $25 on that trade, and it used up, let's see, $12 on the trade. So if you take your $25 and divide by 12, you get the percent return. It'll be a little over 2% for that particular trade. So if you look in the flow chart here, this shows all the trades through the year from middle of February up until the end of the year. And all these little circles are the percent profit per trade. You notice that a lot of them are between around 2% to around 5%. And that's usually our target goal. And a lot of these trades will do them where they're about 30, 45 days to expiration. But we're buying to close these early. I think it was about 16 days last I checked, was the average amount of time that we stayed in the trade. We closed it for these percent profits. And then we have our money back in our brokerage to do them over and over again. So again, if you want to look through the trades, there's a lot here. The few that say 0 on them, these were assigned. And then we do a separate strategy called selling covered calls against it, where we take in money on the upswing as well. So in general, we get assigned about 1 out of every 10 or so times. This was one of the highest win rates. I think it was around 89, 90% last I checked. And then the small times that we do get assigned, we're taking in income on the other direction via the wheel strategy. So that's pretty much it for the cash secured puts. Russell, do you have any general questions on cash secured puts yet?
Yeah, I'm just looking now. So it seems like John is asking if we can ask questions, but he doesn't have a specific question yet. So I'm just reiterating that if you guys do have questions, just let us know as we go, because there's going to be a lot of stuff covered here. As you can see, a lot of data, a lot of questions. So just let us know if we don't see any questions. So if I see questions coming in, I'll just interrupt you, Lance, and say hey, there's a question about what you're saying. So far, no questions though, so that's good.
Okay. So yeah, the cash secured put side, again, we like to get in and out relatively quickly. If the position is really far away, and a lot of these trades, the strike price is a lot smaller than the actual stock price, then we're able to buy to close them pretty quickly because there's less time available for that option to get to that strike price. So a lot of times we look about 10 to 20% off in the out of the money. So we have a lot of cushion there. If the stock happens to drop a little bit, we're usually perfectly fine, and we just close them at 50% profits.
Is this a good point to ask some questions?
Yeah.
Okay, cool. So I'll put them up on the screen so people can see them as well. I think you can see them when I put them up, but Danny C is saying, when you get assigned, then begin taking income, have you determined the total return?
Yeah, I didn't do the total return on the covered call side for the assignments, though, because at that point, it's going to be based on what the individual wants to sell in their covered calls. If they want to be much more current income, they could go on the lower covered call side. If they want to go for possible capital gains, they could go on the higher covered call side. So I don't give an exact data point there, but we're just looking at the closed trades from the cash secured puts.
Cool. And then another quick question from John is, Lance, you're okay with getting assigned with everyone you're picking, correct?
Not for the cash secured puts. I prefer not to. There are some positions where I will try to roll them down and out if possible. And when you look at ThetaTraderz for the membership every day, we do a new cash secured put, and I'll clearly say wheel if assigned. And those I'm willing to get assigned and then sell the covered calls. And that ends up being about 60% or so of the last few months that I've checked. I don't have the exact data on the percent that we want to wheel or not. But that's a good question. We don't want to get assigned on everything.
Right. And there's multiple strategies to go over here, but John has another quick question. So he says, you're looking to have enough brokerage cash to be able to put on these cash secured puts every day. So that's the second question.
If you have the funds available, that's perfectly fine. I don't think there's anyone in ThetaTraderz that actually does every position here. I do up to about 80% of these trades on my own Roth IRA account, which is fairly sizable at this point. So I'm able to do it. But a lot of people won't necessarily have the funds to be selling all of these strike prices every day. We do have different strategies on where to allocate the amount of funds you want to use for the various strategies. So maybe if you had, say, a $20,000 account, you might do $5,000 to $7,000 total in this particular strategy in cash secured puts. Then you might allocate, say, $4,000 or $5,000 in another one, like credit spreads and futures and so on.
Yeah, and the nice thing I found with the cash secured puts is the minimum amount of capital required is very, very low per position, which is something that's quite unusual and quite a nice little bonus for these, right? Like you can do some of these with $500.
Right.
They're
Yeah, if you
not.
look at the strike prices, all these numbers here, just multiply by 100. So if it's a $7 strike, you could do this for $700 in your account. And
Yeah.
that's why we look for lower strike price, the actual numbers here, so we could get in and out of them more frequently. And we also look to have more positions in general, because if we're going for like a $50 strike or $60 strike, that's $6,000 right there in one position.
Yeah.
It's hard to diversify in that case. I think one of the main points throughout this whole time that we're talking is the law of large numbers really matter. So the more trades that you're able to do, the more you're going to get closer to this average return that you're seeing in all of these strategies.
That's right, and that's one of the strengths of ThetaTraderz in your particular style is you don't just do one thing. It's not like you're just selling on one particular stock, and then when that stock goes bad the wrong way, then you get screwed and you have to roll indefinitely, whatever. This is one part of a several part strategy that, and I seriously think that is one of the main reasons that you're one of the more successful sellers out there. And I think you probably agree with that, right? It's the diversity.
Yeah, it's like leaving all your eggs in one basket is usually a very difficult thing to do. I mean, if you put all your eggs in, say, Netflix in the beginning of the year when it dropped over 50%, it's going to be really rough, right? But if, let's say, you sold the cash you put on Netflix, but then you did 20 other different stocks in different sectors, different implied volatilities and risk profiles, that one particular position wouldn't hurt as much.
Yeah. Just Netflix just out of the blue, right? That's just a random stock you picked out of nowhere.
It got hurt quite a bit. I was looking at my two daughters have a buy and hold account in M1, and we just looked. Netflix was down over 50% last year, so it was a little rough for them for their choice. But
so hopefully people are looking through the spreadsheet. If you can't see the link, if you scroll up in the comments on YouTube, you'll see the link to what we're looking at. So you can go through this as we're doing it and go through and look at the other stuff so you have questions prepared if needed. But anyway, we should probably keep going because we've only covered the cash secured put so far, right?
Yep. All right. So let's look at the credit spreads next. In a credit spread, we're going to be selling, in most cases here, selling a put option just like we did before in the cash secured put. But we're also going to be buying a put at a lower strike price. And the reason why we do that is it significantly lowers the amount of money you need in your brokerage in order to make the trade. So if you look at these, almost every one of them is a 5 with. So just picking a random one here, let's say SQ. The stock was at 99. We sold a 65 put, so pretty far out of the money here. And then we bought a 60 put. So that makes it a 5 with difference. You only need $500 to do this trade instead of the $6,500 if we only sold the put. Okay. And in this case, we did return $18 in premium. It just closed at expiration. It didn't get close to the $65 strike price. And then we took in the $18 for that trade. If you do 18 divided by 500, which this trade consists of, it would be a 3.6% return. And that happened only in about 3 weeks or so in that particular trade. Okay, so that's a pretty common one. Again, when you're looking at the stock prices here and the strike prices here, almost every single one of these, we have a very big cushion of how much lower it could go before we start possibly buying out of the contract and getting stopped out on it. Okay.
Very cool.
So again, like 209, we're going down to 185. These are more of the stable companies. They're usually larger stock prices, so we don't want to be using just cash secured puts. And we do a lot with ETFs, like we just did one here with IWM. Those are the small Russell 2000 index. And we get into index funds a bit on here, QQQ, for example. But when you look at QQQ at 344, we're going all the way down to 295. We're getting really big drops there and having that cushion to make it a very high win rate. So if we look at the actual chart here, this will show some of the losses because sometimes we do get stopped out on the trades. So it was a bit rough in April, especially. April had a lot of downturns in the market, and and you guys that were in the market probably had some pretty big losses that particular month. We did get stopped out quite a bit in that April month, and then we got stopped out a decent amount in August. These were the 2 months of the 12 months that we actually had a loss for this particular strategy. But then all the rest of the months, you could see a majority of these circles, and these are the closed trades, are at, this is the 0 line, that's the 10% line. We look around 3 to 5% in a lot of these trades. And again, very high percent win rate, about, I think it was 86 or 87% was the final win rate on the credit spread strategy. A lot of these go around 20 to 45 days out. You just place the trade in. You wait for the stock to either stay where it is, go up a bit, or even go down a little bit. In most cases, you'll still receive the profit that we're initially entering in.
It's now a good time for some questions. I think I've been kind of doing typos in the chat. All right, so I'll put Danny's question up first. This should be a fairly quick question for you. How far in time do you go in the spreads? Also, what delta do you use?
For out in time, we typically, in the beginning of the year, I was doing some staggered expirations. But then just to make it easier, we've been going in the third Friday of every month expirations. And then we're typically selling them about a month out, like here, 420 to 520, 502 to 520. At this point, we're getting a little bit less than 18 days. Then we went to the next month expiration. So these are a little over a month. The average is between 20 to 45 days, but most of them end up being between that 30 to 35 in the end. And then in terms of the deltas, the delta column and column I here shows the delta of the sold put for every single trade. You notice that we always go typically around 0.07 and 0.08 is usually on the low end. And we could go up to around 0.12 or so for the high end. I think once you go past around 0.12, it could start to get a little bit close to that cushion, and you're losing that difference out of the money there. So most of them are usually 0.08 to 0.1 in delta.
Perfect. Brian is asking about the service in general. So we were going to talk a bit more about the service. I know this is we're kind of wishy-washy here going through all results and things, but I thought you might want to answer Brian's question here, that if he just wants to sell cash secured puts and cover calls, do you offer a service for it?
Yeah, so every day at lunchtime, we'll do one alert for one of these put credit spreads and one of the cash secured puts. So every day those will keep coming in. Some members will have a certain amount that they want to actually place trades in their brokerage, and then they're going to choose the few that they feel is the best position for them. I do most of them, about 80-90% of them. So if you're just interested in the cash secured puts and the credit spreads, the last two strategies we talked about, all members get that, the quarterly, annuals, and lifetimes.
Yeah. Cool. And we can talk more about ThetaTraderz in general for the people that aren't members. We just want to go through all the data, but keep the questions coming. Let's see what else we have really quick. So Tom says, for the spreads, do you hold to expiration?
For most of them, we will either buy to close them at $5, because in a lot of cases for Thinkorswim, that doesn't charge you any commissions anymore, so you save in the commissions. But in most cases, we'll either buy to close at $5 or just let it expire worthless, and then you start again on the next cycle.
Cool.
There's an 88% win rate on the credit spreads throughout the year.
What was that last slide? Was that the same as?
Yeah, so average return was 2.75% per trade. That includes the losses. So I literally averaged every single trade we did all year, and that was the actual return per trade.
Right, so proper average. So that makes sense to me. I think people were asking about that, like how do you get that number? And the way I understand it is if you have a 10% loss and a 10% gain and then a 5% loss, you would just add those up, and then you'd divide by 3, and that's what you would consider.
Exactly.
Yeah.
So if you look at column L's, the percent return, I literally added every one of these. I subtracted the losses, and then I divided by the total number of trades. That's how you figure out the average per individual trade.
Yeah.
And then just reiterating from before, the more of these that you could do, and these only take $500 for one position, but the more you could do, the more you'll get to that close to the average without a lot of variation in your numbers. Like if you only took 1 or 2 trades a month, you might happen to get stopped out of it. But if you're able to do 10 or 15 of these trades a month, then you're going to be closer to that long-term average.
Yeah, that's what I love about the strategy too, is it really is a mathematical thing. It's not like, it's like that book that we read recently, the Bets book.
Thinking in bets, any dude.
Yeah. So there's so many questions coming in here. I hope we're not going to throw off your flow too much.
All right, well, you can send a few more up.
Aaron's asking what's the average monthly returns on the credit spreads?
Yeah, it's 2.75. That's the average of all the wins and losses through the year. And remember, we're only in these trades about 20 to 35 days in most cases.
Okay, so that does come out to be the monthly. Okay, that makes sense.
Yeah, it's about a month. It's a little less. I think the average is around 22 days last I checked for the credit spreads.
John's asking a bit more about your strategy. How do you find the cash secured puts? Is there a filter you use? That's a whole book on itself, right?
Yeah, we did a bit on some previous live streams on that. I can't really give a quick answer on that one. A lot of what I'm looking for is to see that it's not near a recent support or resistance line, and then in the 3-month chart that we're able to get that good cushion to get the target return we're looking for. But there is a lot more to that.
Yeah, and if you want to, John, come into ThetaTraderz, that we have, like, Lance has put together like ebooks on this stuff. So the strategies are very transparent, and you can learn them pretty quickly once you're in the service. So it's pretty cool. Sorry, Lance, there's more and more stuff coming in here. Did you want to hold off a little bit for the questions?
No, we could answer them now. That's fine.
Okay, cool. So here is Brian's. What percent of your spread calls are iron condors? I'm not good with those. So
the iron condor is when you sell a put credit spread and a call credit spread. And all of these were actually just put credit spreads. I don't think there was any iron condors in the longer dated ones. Now, that's not to say you couldn't make them an iron condor, and we do have some members in our group that do put them as iron condors, where they sell the call credit spread as well. I tend to look at general long-term bullish, and I don't necessarily want it to go shooting up like that, but you could possibly boost your returns there. That's more of a member question that you could ask in the group. So let's say you were interested in this Disney position where we took in $26 on the put credit spread, and then if you might ask us in the group, stock's at 94, what if I sell a 110, 115 call credit spread, maybe get an extra 12, 13 bucks on it, and then we could look at the charts and actually see if that would be a viable one or
not. Cool. Okay, I'll put up another one. So, hey, Michael, how's it going? Michael Berger's here. How many total trades in a year for this average of 2.7%? It's like 600 trades, right?
For the credit spreads that were longer dated, we did 217 minus, I think, 1 or 2, 216 trades. So pretty much every trading day we'll do one of these longer dated spreads.
Okay, cool.
And cash secured puts was pretty much the same too. I think cash secured puts was pretty much identical. Yeah, 209. I'm not sure why there was a few less there, but there's only about 220 trading days in the whole year when you count weekends and holidays. So we're busy bees. We get a lot of trades because those law of large numbers helps out.
Okay, last question for a while because we need to get on with the data. Danny C is asking what determines which stocks or indices you like versus those you don't for this strategy.
That's going to be hard to make a quick answer to. That's more of a member type question there. But I do have a watch list of about 100 positions, and I do some technical analysis to see if it might be an adequate trade at that time. Again, looking at the support resistance, a lot of the times the strike prices will be even lower than a recent support level. So then we still get that cushion even if it happens to hit that support. But yeah, that's a much more longer dated question that we'd have to answer in more detail one-on-one possibly.
Here's an even beefier one before we continue. John's saying, Lance, could I potentially follow your trades and do this full time? If yes, what amount would I need in my account?
Full time, yes. How much do you need in your account? If you wanted to do one position on every single strategy, the put credit spread side, so just these spreads, it's about 20 to 22 a month. So if you just do 20 times 500, you need about a $10,000 account to do one contract of every one of these. So just the spread side, that's pretty reasonable, I think. And there are some people that will do maybe up to 70, 80% of these. For the cash secured put side, if you want to do one of each, this varies based on the strike price. You got to multiply these by 100, but on average, it's about 9 to 10 times, again, 20 or so positions. You need a little bit more. 900 times 10, it would be about $18,000 to $20,000 on that. But what's interesting about this, you don't really have to work on it full time. These trades are placed at lunchtime. I got my 30-minute lunch between teaching. I look up my strategies using my planning period and lunch before, and then I send it out to the group. And whatever I'm sending out, if I get filled at that price, that's what I'm putting. It takes me maybe 5 to 10 minutes total to do all that. When members are good at it and they see the alert, they could get in literally a minute or two, and then they're done. And in a lot of cases, they're just waiting for the trade to work out. So in terms of full time, like nonstop, like you could do some of the 0 DTE that way, which we'll get to shortly. But the spreads and CSPs are meant to be kind of just set it and forget it. You can set it, wait until you make a profit, and then if you happen to go against you, we let you know, and then you stop out of it.
Yep. All right, cool. Well, let's keep going because I think we still have 4 tabs and 4 different strategies left to go through.
Yeah, there's really 2 main ones left.
2 main ones.
All right, so 0 DTE is a type of credit spread where we're going to be selling off SPX, that is the S&P 500 account, essentially. So the 500 largest companies in the U.S., all in one fund. We're selling either a put credit spread, that's PCS, a call credit spread, that's CCS, or an iron condor, that's IC, which is just a put and call credit spread together. So you look down in the 0 DTE tab on the bottom. We do these trades every trading day except when Jerome Powell, who has more power than anybody in the world, decides to talk. We stay away those days because he could really move the market, as a lot of people might be aware of. But besides the days where Jerome Powell talks, we enter these trades. So we had exactly 200 trades for the year. Starting with a $500 account, we were doing this with SPY in the beginning of the year, and then we switched to XPX. So this number is not completely reasonable. We're going to start with a $1,000 account in 2023. But starting with $500, it ended up getting to $765.48, which is a good almost 50% return on your money in the whole year. The average trade that we got was a 0.42% winner when you count all the winners and losers. So I added every single trade through the year. I subtracted the losses, divided by 200, and that's how we got this percent gain. It literally has the average equation button in Google Slides. So 0.42% per day on these trades. It is not for 20 to 45 days out. So if you could compound your money at 0.4% per day, I mean, there will be some losses some days too. So there is some variability here, and it's a little bit higher than the other strategies. But if you're able to grow 0.4% a day, you're going to significantly grow your account over time. And I'll show the spreadsheet here. You're going to see some losses. There's going to be about the same win rate as an 86% win rate in this strategy to the longer dated as well. The wins are smaller. We usually try to close them at 1.5 to 2% for the day, and that counts your commissions. The losses will be greater than the winners, so you're gonna lose more money than you win on a losing day. But as you can see, there's a lot more winners than losers. And over time, we're just trying to get those large numbers, get a lot of trades in, and then you're able to get that long-term average over time. I think you'll leave it for any questions now at this point, Russell.
I think we're good, apart from Michael was asking if you trade butterflies.
I haven't done butterflies before in this. If you want to DM me one-on-one, we can talk about those. They're a little bit more to manage, and it depends on the time of day when you get out of them. So I haven't personally used them much because I don't see much need for it, but That'll be more of a one-on-one question we could talk about later.
Yeah. Cool.
Let me see what I have for the presentation on 0DTE. Here's 0. I have so many things. Okay, here we go. Average return 0.42%, 86% win rate. So we had 172 winners out of 200 total trades. Many weeks we would have 5 winners in a row. Some weeks we would have 4 out of 5 winners. There was only, I think, 2 or 3 weeks in the whole year where we lost twice. And I don't think there was any week we lost 3. So you could, I wouldn't say expect, you could assume that we could get usually 4 out of 5 winners. Those weeks would be usually a break even or slight winner for the week. If you get all 5 winners for the week, you can make on average about 6 to 8% that week.
Yeah.
And then with those average returns, you'll have that slightly positive number. This aligns close. We go really low deltas on these, so 0.05 delta, which means there's only about a 5% chance it will get to the particular strike prices we're looking at. But we do stop out of them early because if it does get to that strike price, you could possibly lose $1,000 on the trade. And we definitely don't want that to happen. It would just completely throw off our strategy. So we get out relatively early where you're going to lose pretty much twice as much as what you could have made for that particular day when it goes against us. But again, it's not going to go against us much, only about 14% of the time. We take out our profits again, 1.5 to 2% in most cases. This lowers the amount of stop outs than waiting the whole day. And some people are very busy and I'm teaching throughout the day. If I could enter my trade in and then get out at lunchtime or my planning period, then I usually just do that and then not have to worry the rest of the day. Some people do decide to wait until the end of the day and let it expire worthless. And that's still okay. There's nothing wrong with that. You could eke out a slightly bigger return, but it does increase your stop outs as well. We try to get at least $20 in premium off a $1,000 trade. So looking at $20 for that particular day. And then we're going to consider, for a little bit more active managers that are able to see this stuff throughout the day, considering alert prices over the stop prices. So what that means is we usually do a set alert where if it hits a certain price, we just get out of the trade. And that could be a different strategy we're going to consider for some days if you want to be more active about it.
Very cool. Still no questions. Still plenty of people watching though. So if you have questions, let us know. If not, we'll keep going with the data. I'm going to post a couple of links and things in as we go. But yeah, awesome work though, Lance. Yeah, this is interesting.
All right, the main other one I want to talk about are the futures trades. So in futures, we use MES and ES futures. That is the similar equivalent to the SPX and the S&P 500 accounts. We started this strategy in April of this year. And what we typically do is look for a very low delta. We've been going 0.04 to 0.05 delta. That was the smallest. Yeah, 0.05 was the lowest we had all year. And we look about a month out to 25, 30, up to about 40 days out. These will be very big differences from the actual price of the future to the strike price. So we're looking at over 10, 12% drops in a month, which is very rare for the S&P 500 to do that. We're looking to take in small amounts of money here. We're not trying to hit home runs on these. Pretty much trying to draw the walks and hit a lot of base hits. So we're typically trying to take in about $20 to $40 in most cases. And then the amount of buying power you need does vary a little bit. The initial buying power for futures is typically around $400 to $500, but we leave a little bit of extra cash to make it a safer trade. Span margin could come against us and we want to be ready for it. So typically most of these will take about $1,000. And then you can see the expired. We had 100% win rate on this strategy this year. So none of the actual trades got in the money and we were assigned. And that's a pretty incredible strategy. This is the win rate of percents. Here's the 0 line. There's nothing negative. And you can see base hits, walks, but these are per about a month trade. If you're averaging 2 to about 4%, per month, every month, that is a way to significantly grow accounts.
Yeah. Very cool.
Yeah,
Very
this is
cool.
one of my go-to strategies now. I really like the futures because they're
Yeah.
very flexible in your buying power, and you can go really far out of the money.
Yeah, and I think it's worth pointing out that everything we've talked to up until this point is included in the normal ThetaTraderz membership, except for this, right? So this is
Yeah, the MAS futures are actually included, but we are tweaking them a bit to boost those returns. We're doing strangles out of them, and that goes to the yearly and lifetime members.
Yeah, because we just had a question, what is the cost of the service? And so like we're talking about like five different strategies. I get so confused. You have so many going on. And the cost depends on what you want access to. So we can talk a little bit about that in a minute. I think you're getting towards the end of your data, right? Or do you still have?
Yeah, that was mostly it. Let me look over the futures and then stuff for next year. The average future return was 2.68, about 2.7% in a month, 100% win rate. Didn't need to roll or manage. These trades you could literally enter, wait about a minute or two until you get filled, and sometimes get filled immediately, and then do nothing for the rest of the month. Keep your premium, and then the next month just add a new one in. It's really easy to manage.
Yeah.
Leave about $1,000 per position. We're looking at $25, $30 gains in general. I just closed one today. That was a $32 gain, and that we entered in the beginning of December. Staggering funds spreads out the risk. So if you have $4,000, $5,000 account for this particular strategy, doing one every week might be preferable than just putting it all in at once. Because as the market moves, if the market moves down a lot, the next week we're going to be even safer on that put side, the downside. If the market goes up a lot, we'll be safer on the call side. So it kind of levels out and evens out the strikes that way.
Yeah. Okay. Very cool.
Real quick on and then we could get any last questions. I don't have much left. Some of the 2023 goals. Someone did ask if they could do every single trade that I give. It might be tough because soon we're going to be doing some more conservative, like higher dividend paying companies, higher strike prices, where they're not going to return to 4 or 5% per month, but they're more stable long-term plays. And that you would need a pretty sizable account. We're going to look at doing about 2 to 3 a month on these particular ones. There's a sizable video series in all these strategies that we're talking about. I've made over, I think, 150 YouTube videos. There's ebook strategies that are all included for members that go over exactly how to do this stuff. I haven't talked too much about the psychology of when to stay in a trade, why are we placing a trade, when do we get out of the trade. So we're going to be doing a video series there, and we're going to leave that only for ThetaTraderz members because I want to make that more exclusive to our membership. Yeah. There also is a blog on ThetaTraderz.blog. Russell, if you don't mind posting that in the comment section.
Yeah,
the video course there on the basics of like what is a call, what is a put. We're going to get into more detailed stuff there. It'll be about 50 total videos, so probably need by the end of the year on that one.
Okay, cool. So I'll post the link to the new blog here. Okay, so I posted the link to Lance's blog. It has more details. We also have a website which talks about the services in general. And I guess up to this point, we've really just gone through the numbers. So hopefully you guys are now armed with the numbers. We've shared the spreadsheet a couple of times. Lance has gone through like individually every trade, which is awesome. So yeah, let's talk about the service a bit more, because there's some people here asking what's the cost of the service, what is the service. So this is like the opposite of what you normally get in these presentations, like where you just get like a complete sales pitch, or this is like all numbers based. So yeah, let's talk a little bit about what you get, how much things cost. I'm trying to think of the best way to go about doing this, really.
When you join ThetaTraderz, we do one cash secured put and one put credit spread every day. And around lunchtime, I'll be placing the alert out. It goes through Discord, where there's a lot of members, all different levels. We have some veterans in there. We have some that are just starting out. And in those, you'll be able to enter those trades anytime from lunch to the end of the trading day. even the day after if you're busy that day. So there's plenty of time to enter those trades. You get one-on-one access via text and Discord with me, and you could ask the group any individual questions we have. So we're more of a learning service than anything. I like to be able to teach the reasons why I'm placing these trades, why I think it's going to be a beneficial trade in the long run, and then for you guys to understand why it is as well. So I'd like to leave a lot of open communication for the one-on-one questions that you would have. And then for the annual and lifetime members, as part of the inner circle, you'll be able to see every single trade that I post. I do a lot of different futures trades that are not with the quarterly members. You do get a one-on-one Zoom call with me that we could ask about anything you might have a question on. On my YouTube channel the last month, you saw a lot of different types of questions that people had. Some are wondering on how to allocate a total account. Some are wondering the nuances of the different strategy and how to actually place the trade in a proper way. So that's really open in what you need. And we'll go into a lot of detail on what could help for your personal, questions that you have. And you get one-on-one Zoom call with me if you are on the annual plan. And if you're on the lifetime plan, we'll do as many one-on-one Zooms as you need. There's no limit to how many times we'll talk in order for you to get the questions that you want answered.
And yeah, so John is asking that he's interested in sticking with the wheel strategy. So knowing the cost now would be helpful. So we haven't split. We probably should have done this. And honestly, if we were really money hungry, like guru type people, we'd probably have split ThetaTraderz into like 10 different services, right? But we haven't. So what we've done is put it all into one. And so there isn't separate prices in terms of like, if you just want to do this cash secured puts, you pay the one fixed price for access to everything except the inner circle stuff, which is the futures and everything as well as personal access to lands for Zoom calls and things. So I can post what the deal is that we're doing for the new year, which is, let me find it here and see what we've got. So if you're looking to join the inner circle, which is absolutely everything that we talked about there, forever, one-time payment for as long as we are alive, because Lance is not planning to go anywhere. That is a link to subscribe. It's the Inner Circle lifetime option. And so that is basically every single thing that we've talked about. And what we can do is if you want to split that into payments, we're happy to do a payment plan. Just email me. I also have a link here if you want to just sign up for the payment plan with it as well. What we've decided to do is to split it up into 4 payments, like once a month, just to kind of spread that risk out for you guys. So here is the link to the spread out lifetime payment. And so with that, you get all these alerts and the Discord, and then you can also do Zoom calls with Lance. And you're awesome with the Zoom calls. I've been watching them on your YouTube channel for the last few weeks. Pretty good. So yeah, pretty good.
If you also want to leave the link to the yearly, if you're interested in just 1 year, you get one-on-one Zoom call. It's hard to say that, tongue twister there. And then you get your trades I have as well for the yearly plan.
Yes, that's right. So if you pay the one-off $14.97, which is everything, you pretty much get lands whenever you want them, right? Like it seems to be. But if you want to still get access to all the future stuff and everything else, and just pay a one-time yearly, it's only we're doing a special New Year's deal for $4.97, so which is a bargain, because I know a few option sellers that have one strategy that are paying $300 a month for. So if you want to pay $4.99, I think I've set it to. For a whole year of like 5 different strategies, and you can pick whichever ones you're happiest with, and have lands pretty much on tap, then it's a bargain. So I would check it out, guys. All right, I'm starting to get some more questions, some comments actually. So Danny's saying it's a good group. Lance is very helpful, accessible. I've been a part of Lance's inner circle for 6 months. Extremely positive. That's cool. It's always good to get positive feedback. I think it's good.
Yeah. Yeah, thanks, Danny. He has good questions when you have them, so keep them coming.
So let's see what else we've got going on. Michael's asking, would you ever consider supplementing your trades with Magic 8 Ball? The guy claims that his spreads are very close to money with 90% success rate.
I was in his group in the free version about 3 months ago when not many people even heard of him, and People didn't even have the YouTube channel. He does alerts like every 15 minutes and 30 minutes. So it'd be really hard to actually be following a lot of those trades. If you're a day trader and this is all you're doing and you don't have a job and you're just doing this full time, you could possibly supplement with the Magic 8 Ball. The issue is it is all AI based and you don't have that personal one-on-one communication if you only did the Magic 8 Ball. But if you were already in the trade, and you're in ThetaTraderz and you happen to ask me, what do I think about those strikes? Of course, I'm going to help you at that point. So yeah, again, if you're much more hands-on and you're able to do this all day, you might want to supplement it, but it's absolutely not needed. You can do perfectly fine with what we have.
Yeah. One thing Lance is good at is helping people that have already got into problems with other services and things. That's kind of a joke we always have, right? Where we're like, yeah, they can join that service, and then when they get into problems, they can come and Lance can do like a recovery, almost like a recovery service for people that are underwater with other like cell services or whatever.
Yeah, a lot of the one-on-ones I've had with the lifetime members this year, that's what they were asking about. Like, I'm in all of these positions right now before they even join our service. Like, what are some ways to manage it? And you could definitely ask those questions. Once you're a member, I'll help with whatever you need.
Yeah, for sure. WMM is asking, is there a trial for the monthly? We do have a trial, but there's no monthly. So we do quarterly minimum subscriptions. Honestly, you want to do longer than quarterly because like we just talked about, it takes like, this is a strategy. This is long-term wealth building. It's not something where you want to take 5 trades and then be like, this sucks. This is a scam. I'm leaving. You have to get those big numbers. It has to come out. So if you just do 5 trades and then get mad and say, oh, I only made like $5 or something. So we're trying to discourage doing monthly subscriptions because of that. We want people that are committing to longer term trials so that they can see that this math that we've just spent the last hour talking about actually working out. Because one of the biggest things I see, and I've been reviewing and being part of these services for a decade now, is people don't commit. They'll spend a month in a service, and then if they don't immediately make double their money or 20% or whatever, they'll just go, oh, this sucks, and move on. So what we're trying to do is say, hey, this is actually, it's much more logical if you commit to one service and you just commit to it and you dedicate yourself to it. And that's what people do when they financially commit to these things. They're more likely to be successful. Otherwise, you'll jump between services. You want trials with this service, you want trials with this other service, and it doesn't work. So this is why we're not doing monthly subscriptions. It's more longer term stuff. However, saying that, if you don't want to commit to the deal for the year or the lifetime, if you go to the website, there is a 1-week trial, which again is not long enough. It's there just because people want this type of thing. 1 week is not long enough to judge a service by, but it's there if you want it. So if you go to ThetaTraderz.com, you can sign up for the quarterly subscription on there. But again, 1 week is not long enough to judge a service by. So it's there purely for people that just want to, that it's just customer demand. People want to try something, and that's fair enough, right? It's totally fair. But at the same time, you've got to go through. You can email, get on Zoom with Lance if you need to. Even me, Lance is better to talk to about this stuff than me, obviously. But and go through and decide if this is right for you. A trial or only committing for a month is almost not worth the time, to be honest, in my opinion. Is that kind of the same page that you're on, Lance, or do you disagree?
Yeah, I mean, with a lot of the trades that we're doing, they are 30 to 45 days out on expiration. So if you're only in for a month anyway, and then you happen to see most of the trades will end up working out in that month, it's like it wouldn't make much sense to want to cancel after that month because you're going to miss out on the next alerts for the month after. And we just keep cycling them in for the next trades. So I would think at least a quarterly and try with 1 3-month trial. Usually you would be able to understand more about the strategy and how it works by then.
So just posted the ThetaTraderz website. So on there you will find the quarterly subscription. It works out cheaper though if you just take advantage of the lifetime inner circle stuff, or if you just maybe talk to us before you sign up, because like I said, the trial, a week trial doesn't tell you. It just tells you the thing exists, right? It tells you that there is a Discord and there is a Lance that's in there doing alerts. It doesn't actually exist. And it's actually detrimental. You'll get people coming in and they'll do the 0 DTE because that's the day trade stuff. And if they take the first 2 0 DTEs and they don't work, they go, oh, this is terrible, and then they leave, and then they miss the next winning week where they would have been net positive. And everybody loses. it's just not worth it. So yeah.
Yeah, we also try to temper people's expectations. If they do just join and they happen to get a few 0DTE winners in a row, they think it's going to happen forever in the future.
Yeah, right.
This is not about that. We're not trying to get 200-300% on our money every year.
Right.
Like our main goal, 2.5% to 4%. And as you can see, take $10,000, grow it at 3% every month. It's going to be a lot of money. It could be over $13,000 in the end of the year.
Yeah.
So if you do that over and over with compound interest, you're going to be in great shape.
Yeah, for sure. And I think that's a good point, saying that, from that point of view, that you could join for a week, absolutely hit a home run with all the trades and be like, wow, this is amazing. And then obviously it's like not realistic. But so WMM again is saying is a quarter a good time. If you want to try it and you don't want to commit for a year or whatever, yeah, try the quarter. I think 3 months is long enough to get a feel for whether this is good for you. You'll learn a lot in 3 months, that's for sure. Because inside the Discord, we also have like a ton of learning materials as well. There's probably $500 worth of ebooks and things in there that people would charge. I know one guy charges $1,800 for a course. Well, I promise you there's at least double that in terms of educational material inside the Discord that's completely free with the subscription, obviously, to get in there. So,
and I constantly write more and more. I have a few more ready. Right. The psychology of investing ready to go. I got the outline ready already.
Yeah, and so is lunchtime on the Eastern time zone? Interesting question.
It's lunchtime in Central time. So I give the alert around 12:30 or so Central time. So that'd be 1:30 in the Eastern time zone. But again, you could take that trade anytime from then until the market closed for that day, and usually the morning after. So if you didn't get in that day, you could still place the order in overnight, and then usually when market opens the next day, it fills quite a bit. And if it doesn't fill the next day, just send me a message and we could go over the possible strikes.
Yeah. And so to put some of this into perspective, normally the going rate for Inner Circle is 1997. And so I still think that's actually pretty underpriced. But for New Year's and for Christmas and for Black Friday and stuff, we bring it down to 1497, which is extremely fair. I think you're getting 5 or 6 different strategies all in one here. Plus you're getting Lance, who will jump on Zoom calls with you. And I don't know very many of any other people anywhere near this price point that would do that for you. And Lance has been doing this for a long time, has a consistent track record of success. And I think I'm extremely happy to be partnering with Lance on this stuff. I think it's really cool. Yeah.
David said sometimes it pays for lunch. 0DTEs will pay for lunch quite a bit. Yeah. That's our little going joke, It
is, yeah.
It's like around 9 o'clock Central Time, we get in a trade for $40 in 0DTE, and then 10 o'clock we close it for say $15. Like that's a nice little lunch right there.
Yeah. And then so for the yearly, this is the yearly link. If you don't want to commit to the forever Inner Circle, you'll still get access to everything with the yearly link for $497 instead of $650 or something is what we usually charge. So trying to discount it significantly for you guys to get the new year going. And I think if there's one thing people would wish they'd done at the start of 2022, it had been join a service and learn how to sell options, because the market in 2022, all the people I know that made money this year were selling options. There's very few that were buying options that were making money. Yeah. And so like this may seem like, if it's new to you, it may be like, oh, I don't know about this. This is weird. But if the market does anything like this in 2023, you're going to make money, most likely with a strategy. If it goes up, you're going to make a lot more.
It's always good to have that other tool in your toolbox, right? Like even if the market bounces back up and it ends up being a bull market, the strategies will still work, because we don't mind when the stock goes up. We just mind if the stock completely tumbles like way higher than what even last year did. And I know last year was a pretty rough year. Market went down almost 20%, but we're able to take these trades, still get out of them really far away out of the money in a monthly trade, and then still be good and then do it over and over again.
Hey, Benjamin, how's it going? Just put your question up. Saying, is 3,000 to 5,000 an appropriate account size to follow the trades?
Yeah, to first start out, I would recommend at least $3,000, because then you could take 6 different credit spread positions. They're all $500 each. You could do a few of the cash secured put positions on the lower strike prices, say $3 to $5 range. So that's a good starting point to see how the strategies work and then see how it could grow slowly over time. Yeah, I think around 3,000 would be a good minimum to be starting out on these.
Cool. Yeah, and so like we probably like so the workshops, we haven't really talked about those. If you join the inner circle, like on the yearly or the lifetime inner circle, you're also getting access to these workshops that you do, right? So
yeah, so I show every single trade I do in my Roth IRA, which does consist of a lot of those cash secured puts, but I'll do some other option strategies. Sometimes I'll do a poor man covered call, or I'll do a conservative stock and then just look for a really far out expiration. I'm big into real estate investment trusts or REITs right now. So I'll tell you what REITs that I'm considering buying. For my wife's Roth IRA, that's pretty much all buy and hold. So we do stuff on index funds, individual stocks there. So you'll be able to hear all those things. For my futures account, and I did one of my last videos is a $15,000 futures account and how I plan on growing it. In the workshop channel that goes to the inner circle yearly and lifetime members, they see exactly when I'm entering the trades, the reasons why I'm thinking it's a good trade, and then when I'm considering to get out of the trade, showing my buying power and how it's moving over time, constantly showing those positions. And we do have quite a few members that are pretty much mirroring the trade and they're entering pretty close to when I do in terms of whatever their account size is. They could do this with smaller accounts. We could do it with larger accounts. We have some members doing this with six-figure accounts here, and it's very scalable. So you're able to do this in pretty much all levels. And I wanted to leave it very open for people of all different account sizes to be able to do these trades.
Cool. John's saying that if he builds his account to $10,000 with Bishop with the bullseye trade stuff, then he'll come over here. So, well, hopefully that happens.
Yeah. The thing of bullseye, and I do take the bullseye trades, but I do a very small percent of my account on it. And in the workshop channel for Inner Circle, I go over when I get filled on it and what I'm doing. I'm putting little spins on it where if it says on the bullseye alert to buy a call at a certain price, I might make it a debit spread and actually sell a call at a higher price and then lower the cost basis of the trade. So little subtle things that you could do there that they don't talk about. I'm going to be fiddling around with a little bit more there as well.
Yeah. Yeah.
It's possible to make the bullseye trades safer than what they're already mentioning. I know, Russell, you do that a lot with when you enter the trade. You don't necessarily enter right away, even if it hits a price. But then there's other strategies you could use with options to also lower the risk once you're in the trade.
Yeah. Yeah, and you can join ThetaTraderz with less than 10,000 or whatever. I was when I first came across Lance and I was kind of testing stuff out with him, I was only using a few $1,000s, taking the odd cash secure put. There's a cash secure put every single like day, and so you can just pick and choose. It's like a 90% win rate. So you can put one on Wednesday and then hold that for a while and then take another one the next week. It's very like it's not one of these things where you have to absolutely take every single trade. So something
right. Also, it depends on when you entered it, when you buy to close it, what your account size is, and what percent you're doing with each strategy. And those are one of the main questions we're getting in the one-on-one calls now, which is much more personalized because if you have, say, a $10,000 account, based on your risk tolerance, you might want to do this percent in this strategy, this percent in the other strategy, or another person might have a completely different answer to that based on what they want to do with their risk tolerance.
Cool. Well, it looks like John will convert at some point, so he's going to join up at some point. He likes this conservative approach. I think people starting selling options this year are going to be extremely thankful that they did because, in my opinion, and it's anybody's guess, I think we're going to see a sideways-y, choppy, crappy market again for 2023. I'd be really surprised if we see a bull run. Maybe we do. Who knows? I don't know. But either way, learning these skills work, right? So even if we go sideways, it works. Even if we go down, it works. If it goes up, it works extremely well. So it's one of those skills I wish I'd learned it much, much before I did. it took me 8 years before I started to learn the sell side of options, and thankfully I did that at the start of 2022. Well, it's 2021, but and so I was prepared for 2022.
Right. Like, I don't like huge swings in my account, right? Like, I don't want to make 30% in a week and then lose 30% the next week. I like to steady 2 to 5% a month, and I'm happy. And there's no reason to need these big swings that other people are possibly taking, because getting that conservative approach with the right way to manage these trades and enter them, you could more than make up for your long-term goals off it.
Michael's asking, how many years do you shave? No, he says, how many years have you done this, Lance? You've been at this a long time, haven't you? Like, you've been
so for the cash secured puts and credit spreads, I've been doing it for about 5 years or so. For the covered call strategy, I've been doing that even longer, about 10 years total. And I was doing a lot of the conservative covered calls. That's where you own 100 shares of stock and then you sell a call against it. Very conservative strategy, especially with a stock that has dividends, more of a stable blue chip type stock. You could really boost those returns on those covered call premiums, and I'll continue doing that the rest of my life.
Yeah, very cool. Well, guys, I think that's been an hour, so feel free to type in any more questions. I'm going to just paste in the links to join if you're still interested in joining. So first of all, I'll put the yearly in for you guys. If you want to do a payment plan, like I said, just reach out, because we do split the cost sometimes for you guys. Like if you want to split the lifetime inner circle, we will split it up into chunks. It's customizable. We don't want to split it up into like $50 chunks for the next 3 years or anything like that.
Right.
But we will do custom plans, and that's been working pretty well for a lot of the guys that joined the last time we did one of these presentations. But honestly, I don't think you'll regret it if you just sign up for the lifetime at $14.97. You get basically, you're getting a mentor in Lance and like 5 different strategies all alerted in real time every day. So there's the lifetime link to go and sign up as well. I'll put my email one more time. I can always forward stuff to you.
You can leave my email in as well.
Okay. Do you want me just to post your email then?
Yeah, it's just my name at gmail.com.
Right. I'll just post it in a sec. So you can contact them directly, because there's no point in really emailing me like direct, I guess. For a while, I was kind of fielding a lot of your stuff, but honestly,
you could just send it to my personal email at this point. I don't mind anymore.
All right, cool. So here's Lance's email and put into the chat now. So hopefully you guys can see that. So feel free to email him. And honestly, I've never known you to not want to jump on a call with people to talk them through and show them trades or whatever, So it's really like something I've never come across a service like the one that Lance is providing. So
I love talking with these.
You're obsessed with it. Yeah, you're a workaholic. I've never seen anything like it. You're completely dedicated to it, and it's not just it's your life. I mean, it's what you do. You love doing it, and I think it's why I love working with you. So yeah,
you work pretty hard yourself, Russell. Don't take that against me.
Well, I try my best. Tom's saying Lance has always been responsive to his questions. Yeah, you'll never find Lance ignoring you, and I think
I feel bad sometimes when it's like 11 o'clock at night. I'm like, I'll give a quick answer, but I gotta go to sleep. I'll let you know more tomorrow. But like, I know some people are like, oh, what do I do here? Like, I usually I get to when I can. I'm a science today, so I gotta watch my students too. But the lunch after market, those are the best times.
Yeah. All right, guys. Well, if you have any other questions, just email Lance. His email's in there. This is recorded. It'll be posted on my YouTube permanently. I'll send out a link to watch it again if you guys want to replay it and go through whatever. But hopefully that's helpful, and hopefully we'll see some of you guys inside ThetaTraderz in the coming days. Good.
Yep, sounds good. Thanks for everyone joining in. Thanks, Russell. If you have any questions, feel free to email me, and be able to help you guys out in selling options to get that consistent income, very high probability trades, get that one-on-one help with me as well.
Sounds good. All right, thanks for your time, Lance, and enjoy the rest of your evening.
All right, you too.
All right, cheers. All right, guys.